Hello, welcome back to Core Finance. I'm Matt Brown, joined by Eddie Tofpik, Head of FX at ADM/ISI. And we're looking at the end of the year at three more currencies with a bit more of, well, we're panning out and looking at the monthly charts here to give us a bit more of a feel of where potentially we could go in 2018. Starting off with the dollar Mexican.
Now, as I've said consistently for quite a while, the Mexican peso is an indicator of how the US presidency and its current agenda is working. And this particular point, every time you've seen a strength in the dollar, that's been a strength for the US presidency. Now, we had a pullback down a few months ago because of the fact that the Obamacare thing hadn't gone through, and we hadn't seen also the tax thing was getting blocked out. But we're now seeing a movement with the fact that the tax getting sorted, the first real agenda item that the new presidency has managed to do. And at the moment, it's looking potentially high. Now, I've put a head and shoulders, because is that going to be? How far high will it go? On the horizon is this Saturday with the potential shutdown of the government. Okay, they'll do a continuing resolution and move down, kick the can down the road. But who knows? They need to sort that thing out at some point. But at this particular point, it's more likely to be an ascending move, a test up to say 1975 or something like that, which is the 50% fib of this move down for the whole of 17. That's an opportunity to try. You've got the shift pitchfork, which is a little bit higher, around about 20 even, and that's a dynamic one. It changes all the time. So it's still looking as if this head and shoulder may have actually gone the way of all things and just disappeared. It's not going to be that. It's looking as if we may try a little bit higher, or we could still go up to say 20 something, and then if we come off, then we confirm that head and shoulders. And then that's actually a really, really interesting thing, because that'll mean late next year, early the following year, if we break that neckline, there's a chance for the Mexican peso to drop down to something like 15. The dollars have dropped down to 15 against the Mexican peso. So, and that would be obviously maybe there's something in there. I don't know at this particular point, but at the moment, a little try higher wouldn't be amiss at the moment. It wouldn't be amiss, but just bear in mind there's still his head and shoulders still likely out there.
So 2018 could be a very interesting year for Mr. Trump.
And for the Mexicans as well.
Yes. Fantastic. Well, moving on, let's have a look at the Brazilian, the real.
What a mess. You know, you expect emerging market currencies to be more volatile, and if you look at, say, from 2008 right away through to, say, even mid-2016, it didn't surprise. It fulfilled its ambitions.
Yes. And
then we've done nothing. 340 to 305 has been the trading range for this year.
Which is incredibly tight, as you say, for an emerging market currency.
I mean, the previous month we've got a Doji cross, high, low, and opens and closes at the same level. I mean, what the hell's that about? So, and then you've got, that's not the only one. There was 3 months ago. You've had some big moves on the prior to that, but again, every time, with the exception of a few occasions, they've opened and closed. The inter-month they've moved, intra-month they've moved, but the actual closes have been fairly narrow from where they opened. So at this particular point in time, I'd say you've got support at 304, 303.80, resistance at 364, but to be honest, 340 is good enough. As a width, 350. It's travelling sideways at the moment. It is maybe a basing action, maybe a beginning for a move further up to go next year, but I wouldn't call it yet. It's too early to say.
Okay, and finally, let's have a look at the Indian rupee. Obviously, demonetisation going on in India. But let's have a look forward into the next year or two, potentially, from a technical point of view.
Well, 1617 is a double top. And it's a lovely topping action. It looks more and more and more like that. We've broken basically through every moving average except for the 5-year, and that's not that far away. We've got support at 63.55, which is tested and bounced off 4 or 5 months ago. I think that will be the first test for the downside. That's more likely than not than the upside. And then after that, you've got to look at the 62.20 area. There's a number of Fibonacci areas of support there. It actually traced from 62.19 to 62.29. So that's an area of support. And then after that, you've got to look down to 56.38, really. There is some support elsewhere, but 50.13 possibly, but really you've got to drop down to 50, I'd say 56, something like that, sort of there, 56.38. If that's the case, the key level is 58.22 prior to that. Does it look like it's going to turn around? I don't think so at the moment. It looks too much like it wishes to try lower. There's nothing I can draw on there. I can't draw, I suppose I could draw a trend line from the 08 to 11 lows, but that's going to be well below the market, something in the 58 area or something like that. So I didn't bother doing that necessarily. So the key test is going to be the 5-year when that moves up towards the market. It's 63.28 at the moment. That's gradually going to move up, and let's see if the market gets towards that and that key level, 63.55, in the next couple of months. That's the one to watch.
You heard it here first. Well, lots to obviously digest into the new year. Eddie, thank you very much for joining in this year.
Thank you.
This year, I should say, at Core
Still in
Finance.
17.
Yes, indeed.